Hi, and welcome to this week's Intelligent Wealth podcast. As usual, I'm delighted to introduce my eminent guests, although they're too modest to think they're eminent, but in my eyes, they are. Our fund researcher for Minerva Money Management, Awet Germay, and my fellow director, a good looking young man called Carl Roberts. Who's also very accomplished. They're far too modest to admit it. I wish I could be like them too. Anyway, this podcast is really for serious investors, and particularly the type of investor we would call a value or quality investor. Really, more like. And a quality investor, I'd say simply, is someone who likes to invest in not only great businesses, but great businesses that got the ability to compound and reinvest in themselves and grow and grow and grow. So think companies like Amazon, for example. It's always a good example to use because that's the kind of philosophy they have. But we don't just limit ourselves to giant tech companies. We also like to invest in small caps and mid caps as well. So that's the basic thing. We hope to teach you things that you'll find useful, and of course, by having a discussion amongst us, we can always spark lots of ideas. There's always interesting debates we have between us because we have different takes on things. That's what makes it quite stimulating, really. What we're going to do now, guys, is move on to topical news. And I know there's something Carl wants to tell us about Warren Buffett and Berkshire Hathaway.
Yeah, I think Awet's going to cover a recent sort of sell-off in the market shortly. But as part of this sell-off, Warren Buffett has sold around 50% of his Apple stock. So obviously Apple's a stock that we track closely. It's been one of the big tech companies. We probably all use their products. And Buffett's had a massive holding in Apple for some time now. It's been his largest position in his Berkshire Hathaway portfolio. And yeah, just recently he sold 50% of it. Now, you could look at this and think, does that mean he's seeing signs of things being overvalued? Is Apple now overvalued? Because Buffett generally likes to buy and hold, doesn't he? He doesn't usually sell. If he believes in a great business, he just wants to hold that. But I do think it was becoming such a big proportion of his overall portfolio that he's just being prudent, I think. Selling it down and taking some of those gains. I think even with the 50% sell-off, it still forms about 30% of his overall portfolio. So it's still his biggest holding. But yeah, I think a lot of people will take another look at Apple on the basis of that.
Yeah, I think interesting as well. In 2020, Carl, Warren Buffett, he sold 10% of Apple. And what he admitted afterward, he said he will never sell. I mean, not never, but he wouldn't sell. Him and Charlie Munger, they say they wouldn't sell Apple in the future. But what it shows you now, in a few years later, 4 years later, he changed his mind and he sold pretty much 50%. And it shows you at 93, he's still thinking and making rational decision and changing constantly with what he thinks Apple, because he's probably, as you said, Apple is slowing down. He can see that it's slowing down, and it's 50% of his portfolio, which is a concentrated risk. He needs to spread that around and take opportunity. I mean, when the market is declining. So, but historically, what we learned from Buffett, I think he sold McDonald in 1998, and since then, I think McDonald has been up like over 1,400%. And Costco, I think in 2000, and since then is 2000, yes, and since then it was up 190, and he did the same thing with the airlines. So every time he made a sell decision, it wasn't like all of them were not right. So he made some of them were still, he missed, for example, in the case of McDonald in 2000, in 1998. So the key lesson here is just he's doing what he knows at his best, and other investors should not just mirror Warren Buffett, but just they have to do what's best for them.
Yeah, I think the key thing here is that over concentration risk. I think if you have your portfolio and you're highly concentrated in one particular stock, it is a risk. It can work out for you. You can get great rewards from doing that if that company is very successful, but you are increasing the risk of your overall portfolio. And I think we do something similar with our fund where, you know, if it becomes an overly concentrated position in the fund, we like to sell and bank some gains, but we don't want to sell all of it if it's a great business. That's the key thing. And the same if it goes the other way around. You know, if there's a big shock to the market and a big temporary decline in a value of a great business, we want to buy more of that.
Yes. Yeah. So the market's been in turmoil in the last few weeks, particularly Monday, the 5th of August, Awet.
Yeah.
What's your thoughts about that?
Yeah, I think a few weeks ago, the market has been declining. I mean, there's a shock in the market. And I think when we wake up in the morning on Monday morning, the Japanese Nikkei was down by 13, close to 14%, and the FTSE followed by 2.7%, and Bitcoin at some point was down 15%, and the Nasdaq, 3.4. So, but what happened is after a few days, I mean, the market is still recovered, recovered. The key lesson you learn is just a reminder. It's always there will be market decline, market shocks. There will be so many things in the world, and the market would decline. And if you don't understand where you invested in, that's when you panic and do the wrong thing. But the key thing is to know where you invested and to know the company that you're invested in. And that way, if the market decline, it's an opportunity to buy more, and you don't panic, make irrational decision. So it's always just a reminder, is this is going to happen every time in the future. There's a market cycle, there'll be a market shock, but the key thing is to always stay rational and to invest what you know. As Warren Buffett always says, the circle of competence, to just know where you invested in, and to just sit tight and think long term.
I think as well, this recent sell-off has been a big reminder and a worrying sign in a way of highly leveraged trades. Because one of the issues with this recent sell-off has been the fact there was a large short position on the Japanese yen. And obviously what's happened to the Japanese yen recently, they've raised interest rates, so it's strengthened. And I think this has caught a lot of people out, because if it goes against you and you're highly leveraged, you're going to get margin calls and you're going to have to sell other assets to cover your position. And I think that's partly what's happened, why we saw the Nikkei fall so fast and so quick. So it's a scary trend that we could start seeing, that actually these crashes are quicker and even more severe than what's been in history, just purely because leverage plays such a key role now in the financial markets.
Yeah,
there's a lot of automated trades.
It's forced selling. That's the problem. You never want to be in a position as an investor where you're forced to sell, because then you're not in control of your trades, are you? And that's what's going to catch a lot of people out if you're using leverage. So you could be very careful with that.
But this kind of market decline is very common. You know, if you look at the last 100 years of US stock market returns, you'll find something like 2/3 of the years where you've had 10% plus gains, you've had a 10% plus drawdown that year. So this year we're still up overall. We could end up the year we're still 10% plus return, but we've had massive declines as well. So just underlines that it's very volatile. My concern is, are we in an AI bubble, and are we seeing the typical Gartner hype cycle event? You know, this graph where prices rise and rise and rise with a bubble, and then make a big decline and then carry on growing again, much like the dot-com bubble and burst of the late 90s, early 2000s. Is that what we're experiencing here, do you think, Awet?
Yeah, for sure. If you think about it, I think everyone has been thinking about AI. There was around 26,000 AI unicorn in recent, just a startup in the last few years. And everyone seems AI is going to transform everything. With every technology, it's easy to to say it's going to change everything, but it's difficult to do it practically. And we can see that companies like the big tech are saying, we are investing, but we don't know what would come out of AI. And there's a hype, there's a cycle. I think there was a book, it was written about is it the something dilemma about the technology. It's always the new technology. It takes time, and not the first one who created the technology will win. Is the one after them. So what we see here is a bubble and hype. I think at some point it would be correct, and it's already been, the market's already been a little bit corrected, especially in the semiconductor space. But that doesn't mean semiconductor and the AI, which is all bubble in the long run. If there's like a good uh, outcome from AI and real world usage of AI comes of AI, and that's when we can see some real physical evidence that is working and more investment, and it will go to AI.
I just wonder if we're seeing a parallel with the dot-com boom and bust. There was a
Mhm.
difference this time. I mean, with the dot-com boom and bust, if you named your company .com in
Yeah.
America, your business could be absolutely rubbish and make no money, and yet it'd be worth billions of dollars overnight.
Mhm.
So 90% of those .com companies failed. The difference, but what did emerge out of it was the great giant tech companies of today, the
Yeah.
likes of Meta and Alphabet and Amazon, for
Yeah.
example. The difference this time, it's kind of turned on its head a bit, because a lot of the giant tech companies are the ones investing very, very heavily in AI.
Mhm.
But as Alphabet, the owners of Google, the CEO recently admitted, they're spending billions of dollars on AI, and even companies like Google are not sure it's going to pay off. So even
Yeah.
though they announced fantastic profits, because they're very dominant in many areas, Google, of course,
Yeah.
the share price dropped. So it's a different dilemma this time. But it still, to me, feels like a bubble. I mean, I do think it's transformative, much like the internet was from the late 90s, early 2000s. It did become very significant over the next 25 years. I do think AI is very transformative, but there'll be a lot of losers as
Of
well.
course.
And it's not just the giant tech companies, of course, there are other companies. So I'll just be a little bit guarded not to get too carried away with the hype. It is a great tool, AI. We all use it. I'm speaking for both of you, but I'm sure we all use it. I know I do.
Mhm.
But we don't know who the winners are going to be. Probably all of us overall, I suspect.
Um, it's very difficult to predict who's the winner, but for sure, the semiconductor space is the best way to win the AI race. The reason is because all this AI needed the processing power. That's the key thing, and the processing power remain with the powerful semiconductor companies. So yes,
Yeah.
the software part we can't predict because it's difficult this
Yeah.
early, but the hardware part, especially with and most of AI now is especially the GPU part is by Nvidia, and Nvidia is pretty much ahead of this race. But the software is the one we don't really know
And the
who's going
data
to win.
centers, isn't it, as well? So it's going back to
Yeah,
that, what we always say, going for the tool
Yeah.
makers.
yeah.
Yes. Yeah. We very much favour that in our own fund. We like the tool makers,
Mhm.
picks and shovels manufacturers, equivalent of the gold rush. Anyway, that brings us nicely on to the main topic of today, which is next generation internet. Now, one of the 7 themes of our fund, the YFS Intelligent Wealth Fund, is connectivity, which includes next generation internet. So I was chatting to uh, the guys just before we went live today, and I said to them, I'm not entirely sure what next generation internet is. I mean, I know it's a terrible confession because we're going to talk about it now, but we were agreed that it would cover areas, like blockchain, um, the more democratization of the internet, or decentralization, should I say,
Mhm.
um, and more token-based economics. I've got a little story to tell of my own. I did sample this with what's known as Web3. It's considered there's 3 levels of web so far. There's been Web 1, Web 2, and Web 3. This is the one. Web 2 is dominated by big tech, but Web 3 is a little bit different. It's more like it's been more democratic, as I said, and
Mhm.
we were the products of Web 2, but less so for Web 3. So
Mhm.
uh, Awet and Carl felt it also covers subjects like 5G, 4G, and all those kind of things. and AI. So these are the kind of areas we wanted to cover in next generation internet. So I think it's best if I hand over to someone who really knows what they're talking about, Awet, to explain it further.
Yeah, I mean, the next generation internet is pretty much the future of internet, and that would be the cloud computing and the companies like cybersecurity and the companies that who are, we are shopping from our phones and so on, the e-commerce, the big data provider, like they call them the hyperscaler, like the Microsoft and Amazon and Google, and the one behind artificial intelligence, Nvidia, for example, and so this companies like blockchain technologies, for example, like this is the companies that revolutionize everything, and changing the way we live and delivering things that things that we never done historically. I will mention some few companies that they are operating in this space. For example, we invested in a cybersecurity company called Fortinet Inc., and Fortinet is run still by the visionary founder, the Shi brothers. They still run the business. They have more than 20% in the business. And recently had an earning. The earning was impressive, and the share price went up more than 20%. So, and if you invested in that business in the last 10 years, you will compound by 30.31% in the last 10 years. So has been a great compounder. But the good things about the cybersecurity is pretty much the backbone of the internet. In the UK recently, CrowdStrike had some software glitch, and you can see the world just didn't move for a few hours. So people couldn't fly, people couldn't use the train, and so on. So these companies are pretty much the backbone of the internet. And secondly, followed by ARM Holding. All the Internet of Things foundation chips needs ARM. CPU. They power all the companies that are where they are in the Internet of Things. So companies like ARM has been great, especially for building the Internet of Things, and now they move into AI and so on. As if you invested in ARM since IPO, I mean, they just had a recent IPO that you would have gained 74%. So it's not, I mean, it's just a recent IPO, and the companies like in the e-commerce space, there's Shopify. I mean, Amazon is the biggest one in the e-commerce space, and followed by Shopify in terms of market share. And Shopify has been a great compounder. Is still run by the founder, and he solved the problem that he was facing to create Shopify, where we have Shopify today. And in the last 10 years, they compounded around 42% on average.
That's
so
incredible.
it's been a great investment. And I mean, if you think about Shopify, think about it. If you want to go to Amazon, you use Amazon as a brand, but Shopify is like empowering entrepreneur. If you want to push your business, Shopify will empower you, give you the tool, everything in one. So these companies are pretty much taking the painful things people don't want to do in terms of like dealing with websites and everything, and they just give you and even payments in one place, and they just let you run things that you are good
Another
at.
example of toolmaker, isn't it? So I'm dying to interrupt, Awet, because one of the things we really keen to offer to our listeners are one-page summaries of great businesses, either that we're invested in or we like, but for one reason or another are not invested in. This isn't a recommendation. It's just useful information. So we've started to compile a library of one-page summaries. They're really, really good because Awet designed them. And we're pleased to offer listeners our one-page summary on Shopify, which we think is a fantastic company, and our fund is invested in it. As I say, not a recommendation, but it's up to you to decide. But we hope these one-page summaries will really help you get a lot of information to hand in a simple way. You still need to do your own research, but it's a good starting base, I would say. Carl, you wanted to give some examples of next generation internet yourself, didn't you?
Yeah, I think when we talk about the next generation internet, there's two parts to it, one of which you've already alluded to, Tony, but it's all about the power, really, the power of the internet. So at the moment, there is limitations to the internet and its connectivity. So if you think of some of the great products and innovation that's being built, particularly in electric cars, for example, potentially there's pros and cons whether they are actually good for the environment or not. But there's a limitation to that at the moment, and that's range. They need good battery source, and then when you come to charge that battery, it can take a long time. But what if the connectivity improves so much that actually the road itself could charge your car as you're actually driving, and there's no need to then plug it in somewhere to charge the car? We need far more power and connectivity to do this. So I think we've got to kind of 5G. I mean, I don't know about you, but most places I go in the UK, it's a bit dire still to try and get even 4G in some places. But I think we should be thinking even further than 5G, 6G, 7G, what's coming next. So because the amount of devices and things that are going to be plugged in to the internet, we're going to just need a far greater speed and efficiency.
Yes, of course.
The second part of it is going to be that democratization of the internet, like you said. At the moment, we're pretty much run, aren't we, by the big tech? That they control everything that we're using. Whereas if we start to look at the likes of the blockchain, that's actually then sort of could democratize this. It's controlled by everybody essentially. There is no one single source of control. Now, whether governments and countries around the world will allow this to happen, particularly when it comes to money and currency and things, because if you lose control of your currency, then you do essentially lose control of power, don't you? It's much harder to tax people, much harder to control where spending should go. But this facility, I believe, is coming. It's just the fight against it from countries and what levels of control they want to put in place.
Interesting.
The good thing as well, like the Nvidia CEO was in the last annual report, he was saying the next AI wave is going to automate 50 trillion of heavy industry. So as you said as well, semiconductor remain pretty much the backbone in terms of like electric car, for example. One electric car, there's between 1,000 to 3,000 chips in a car. And if you say, like, for example, if you automate the road and so on, you will need more connectivity. With the complexity increase, you need more chips. And I think back to the semiconductor would play a significant role in powering next generation internet.
Yeah, it's like when you watch these science fiction programs, it's amazing. Even the really old ones, go back kind of 50 years, watch science fiction. It's amazing how many of those ideas have come into being and are actual products we now use today. And it's the same, isn't it, going forward? There's all these ideas in science fiction as to where we're going, but we're going to need better internet. We're going to need more power to be able to build these things. So the ideas are there, but we haven't actually got the technology yet to be able to build those things. And I think that's what's coming next with the next generation internet.
Carl, it's great because I've only recently started watching some of the great films from decades ago. For some reason, I've only just started watching some of them. Things like Terminator and what else? Star Wars, The Matrix, and so on. I've only just started recently watching them. But you're very true what you say. It's amazing the foresight people had when they made these films. I sincerely hope you said it's coming true. I sincerely hope Terminator doesn't come true and robots take over the world.
Well, who knows? But you mentioned the Matrix. I mean, that is the metaverse, isn't it? I mean, that is coming. I mean, at the moment, it's a bit cartoony. It's a bit basic. Yes. I don't think the graphics are all that great, but the foundations are laid now, aren't they, to be plugged in?
Yeah, they are. Yeah, incredible.
Yeah,
and yet some people are very dismissive of science fiction, which I find remarkable because I just find it is so good. It's so realistic and so believable.
I am optimistic, but I think thinking through it, I don't think we would get to that stage. But we can automate. It's going to make us productive and so on. But I just don't believe the robots would connect themselves and so on and so on. Everything would because
Well, as you've always taught me, Awet, you can't predict the future.
Yeah,
that's true. But I think that's true. I actually don't know. But based on what I can see, for example, even what we learned recently about AI, the people hyped AI would change everything, but the reality is AI remains still is a software tool that we can
Yeah.
it can empower us.
Actually, funny enough, I do agree with you, Awet. My personal view
Mhm,
is, and I could be wrong on this, but
mhm.
my personal view is there will eventually be resistance to turning everything over to robots, because at the end
Yeah.
of the day, we are human beings.
Mhm.
We want human contact.
Yeah.
The thought of going to a restaurant and only being served by robots and not a single human being in sight
Yeah.
appalls me. I
Mhm.
don't even like going into the supermarket, having to queue up at those self checkouts, because
Yeah.
they always catch me out. They always got to call the assistant.
Mhm.
I just find it really annoying, you know. So I
Um,
think there will be resistance, and also governments will realise they've got to have people in jobs as well. So
yeah.
I think there'll be, even though we know we can automate everything and robotize, is that a verb? Robotize everything.
Yeah.
But I think there'll probably be resistance. I don't know. That's my gut
The thing
feeling.
is, though,
But
Tony, like I've said before, that's because we're of that generation. But if you're born today and all
yes,
you know is tech and
true.
screens, you won't know any different. So you
Yeah.
say
No,
as
that's true.
humans,
That's
we
true.
crave that kind of personal touch, but the new generations
Mhm.
being born won't know what personal touch is. Yes, it's evolved, isn't it? It's like we've evolved from apes. You know, you
Yeah.
would
Yeah.
say,
But like you said, like taking your children to that campsite, they'd rather do something physical with other human beings.
Mhm.
There's definitely a benefit there that is beyond what you can get just from a
oh, I
screen.
agree. Yeah,
Because
I agree
when
completely.
we
But it's just one.
when we get out in the fresh air, you're doing something physical.
Yeah.
You know, I find my own stepchildren, if they got a chance to go out with their friends, they merrily do it and go out and do various sports and love mixing with their friends. And they actually put their devices down when they do as well, which is quite nice.
Yeah, I mean, what Carl said, I think Darwin is he's right. Like the evolution of human being. If you think about it, 99% we were farmers. Now is the other
Yes,
way around. Things are possible. Things could change in the
they
long
could.
term, especially after generation.
Let's wait and see.
Yeah.
Anyway, it's been very fascinating as usual. It's rapidly going by the program, but we're on to the recommendations section. Um, my dear wife, Cholpon, who's a fellow director of our fund management company, Minerva Money Management,
Mhm.
chastised me recently and said, "You're spending too much time on recommendations. You got three recommendations each. You should be promoting your own show." But I actually think this is very valuable to any of the
Mhm.
listeners. So we're going to just limit it to one recommendation each from now on. Um, and let me hand you over to Carl first. So, what's your recommendation, Carl? Be it a book or video or podcast or whatever you'd like to promote this week?
Yeah, I'm going for a podcast this week, and I've recommended this podcast before. It's the Modern Wisdom podcast. In particular, episode 819 is an interview with Dominic Cummings. Now, probably a lot of listeners will know Dominic Cummings. He was sort of the special advisor behind Boris Johnson during the
Mhm.
pandemic. Also was leader of the sort of Leave campaign during Brexit. So he's one of those figures where you either kind of love him or loathe him. But what's
Mhm.
fascinating about this episode is kind of a no holds barred, just look back on his time in government. And it's just fascinating to
Mhm.
hear just how inefficient, everything you think of
Yeah.
government, it basically is probably true in terms of efficiency. And he actually even starts talking about Yes Minister, a program we're very fond of.
Oh, great.
And he says it's
Great.
basically exactly like that, So
No
it's
change.
a
Yeah.
fascinating interview, whether you like him or not. He's been at the center of power, and he's not scared to give his opinion, which is good. He's not part of that
That's
machine.
good.
So yeah, I found it
Mhm.
really
No, that's really
interesting.
good.
I think what
That's
you
really
said
interesting.
interesting as well. Elon Musk was given an interview, and he said the government would be great to have a government efficiency oversight board, so that can hold government accountable. I think you're right. Like the government need to be accountable, and there should be some body part that tell them how efficient
Well,
they are and so on.
good
Yeah.
luck with that one. I suspect it'll be just as inefficient as the other government departments. But anyway, let's move on from that.
Yeah.
So, Awet, what are you recommending this week?
The Changing World Order by Ray Dalio. I think Ray Dalio talks in this book about he's done 500 years of study of why nation fails and rise. and why they succeed and fail. And I think it's interesting. It goes deeper into 500 years from the Chinese dynasty, from the Dutch Empire and the British Empire, the French, and so on and so on. And then after the Second World War, and we have the American, the dollar, the world currency, and so on. And it's interesting how the world is shifting, and it just shows you what he talks in the book. Sometimes you can see in the reality, and you just can't believe, like, how is this happening?
Yes.
So it's a very interesting book to read, and I've read it, and I'm planning to reread it again. I have it here with me, so yeah, I will highly recommend it. Ray
Yeah.
Dalio has done a good work. Even there's a video on YouTube about this book, a 30 minutes video, and it's really interesting. It takes you through like the empire, why they rise, why they fail, and it gives you a good understanding about how
Yeah.
you can predict the future.
What's interesting about Ray Dalio,
Yeah.
first of all, I admire you for reading his books because I personally find them unintelligible.
Yeah.
There's no doubt he's a genius, and
Yeah.
he used to run the world's largest hedge fund. I think he's more of a background person now.
Yeah.
Bridgewater Associates, I think they were called.
Mm.
But what's unique about him is he's got this financial knowledge, but he's liaised with and consulted historians
Yeah.
and put together a unique book on the changing world order that goes back literally thousands of years, back to the Chinese dynasties.
Mm.
So he's got a unique take, because you don't normally get great financial people who are also great financial historians.
Yeah.
So that's what makes it so amazing. If you've got the ability to, I always find him quite difficult to understand because he's quite technical. He's not a great communicator, but he's a great writer and a great man, I think, in many respects. Very modest as well with it, but he's pretty fantastic. If you can read even just a summary of this changing world order, it is quite enlightening. I particularly like the eight characteristics, the 8 factors that make an empire great.
Yeah.
And it's so clear that China is going to become the next great empire and replace the USA, because all those 8 factors they're scoring very heavily in. And the US is scoring heavily in some areas, but they're clearly getting very weak in others. And so Ray Dalio always talks about how we've seen this before, only typically it might be more than 100 years ago. And of course, because it's beyond the life expectancy of your family, like your parents, for example, we tend to forget about it. It happened 100 years ago. You might have remembered it if it happened 50 years ago, because your parents would have told you about it. So that I find quite interesting. It's the old adage, isn't it, that history doesn't repeat itself, but it rhymes.
Yeah.
So interesting. What I've got to bring to the party this week is my latest book I'm reading. I've got it with me. The Joy of Compounding by Gautam Bade. Now, I haven't got very far through it yet. It's quite a thick book.
Yeah.
But it is absolutely brilliant. If you want to improve your knowledge of investing, you get it from this book. And of course, the great joy of investing seriously is it's not just about money or making money or just researching companies. What you have to be is very well read across a wide range of subjects, which could include philosophy, physics, maths, history, English. It's being a fund manager gives you the ability to really improve your knowledge, your understanding and wisdom. And what you find, the greatest fund managers, including Ray Dalio, have got many, many attributes. These people are fantastic, absolutely fantastic. So it's a very rewarding profession to be in, because it goes way beyond making money. And when you think about it, if you're going to be a great investor, you've got to really understand things, and you've got to really understand how the world works, and you've got to be really got good values, like honesty and integrity and so on, so to get to the truth. I'd love to one week say I recommend this book, but this is a shameless plug for my own book I wrote a few years ago, Wealth Magic. Not in the same league as Ray Dalio, but hey, I've done my plug now anyway. So everything we've covered in the show will be in the show notes. Carl does remind me every week to remind you that you can leave us a review on our podcast on Apple Podcast app. Please do that, because that will really help us go up the rankings and attract more quality guests. We've started interviewing very high quality guests. I've done 2 interviews so far. They've not yet been broadcast, but we're hoping to get along people very regularly every month. Right. So this format of the show, this group discussion of us, will be once a month, and we'll have at least 1 or 2 top quality podcast interviews every month, maybe 1 a week in the future. So we want to keep adding value. Just to remind you, we've got these great 1-page fact sheets on companies that are in our fund or ones we admire but are not in our fund. There's lots of information in the show notes where you can subscribe to our monthly newsletter. Again, we want to add value. We just want to keep educating, keep giving you lots of information. They're not share tips per se. It depends how you take it, because you've got to do your own research, but there's a lot of value there. If you do your own research on top of it, I think you'll find these fact sheets will really help you quite a lot. That's pretty much all I've got to say for today. Any more comments before we go, guys? Anything more to add? Have I missed anything?
No, I think that's it for today.
Hopefully not. So I really appreciate you taking the time to listen to us today. And I wish you a great day and a great month. Till next time. Bye for now.
Bye.
Right, bye.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.